You're not going to say action?
Action!
Oh, thank you. I was waiting for it, because usually I just get cut off if I start too early. Hey, good morning, everybody.
I was getting a drink of my coffee.
Welcome to ShortSalePowerHour.com. My name's Fred Weaver. This is my directing partner, Kevin Kaufman.
I'm the director
We're
now.
Group 4610, Arizona's
I'm going to
premier
put that
short
on
sale
my
team.
email signature.
Great.
You know how bad this pisses people off when we talk over each other?
Oh, I'm very aware.
I get so many comments on that. I can't hear what you guys are saying. You're talking over each other. I know. It's just a tad bit. I don't know.
Cool.
Has nothing to do with the show today.
I'm aware.
Okay.
So, hey, Kevin, I'm fired up about Monday's episode still.
So am I.
So if you all missed Monday's episode, you need to go back and watch the Outback episode that we had on Monday. It was definitely awesome. And yesterday, we exposed a little story, a situation that was going on with actually one of our favorite servicers, but a negotiator at that servicer that we are not a fan of based on her actions at Wells Fargo. So you need to watch that episode too. But today, I want to talk about mortgage insurance.
Let's do it.
Okay, so
MGIC?
real quickly, guys, I got to tell you right now, we're not going to be able to get in a full episode on mortgage insurance, and we're never going to be able to satisfy all of your questions on mortgage insurance.
It would take about 3 weeks of
So
10-minute videos.
just know that up front. If you want detailed information on how to beat mortgage insurance companies, understand it to the fullest, I encourage you and implore you to check out Short Sale Power Hour /
eStore.
eStore,
Just
right
click the
above
button
you, right
above.
there, and you can purchase our audio video series for like $199. It's 12 plus hours of video. You can watch it over and over, and we don't talk over each other that much.
No, because we had professional photographers there telling us when to talk.
I'm
Or
aware.
video, what are those people called?
I don't know.
Cameramen?
Are you done?
Camera person? What's the politically correct word?
So here's the deal, guys. Mortgage insurance. You need to understand at the very basic level, there's 2 types of mortgage insurance. There's PMI, private mortgage insurance. That's the kind of mortgage insurance that if a borrower goes out and gets a loan for more than 80% of the loan to value of that home, more than 80% LTV, they have to have PMI. So your FHA loans that they're putting 3.5%, 4%, 5% down, whatever the case is, they have PMI. There's another kind of mortgage insurance out there, though, is what we like to call LPMI, or lender-placed mortgage insurance.
Yes.
There's different names for it. We're not saying ours is the correct name. That's just what we like to call it. And since it's our show, we're going to continue calling it that.
Yes,
So
yes, we are.
lender-placed mortgage insurance is the kind of mortgage insurance where a lender looks at a portfolio or a pool of loans they have, and they go, you know what? Those seem kind of risky. Let's go ahead and buy some insurance on them. We must have been jackrods in the beginning to have ever done those loans.
Let's go hedge our bets. Essentially, like
Yeah.
right off the bat, they're going, I'm guessing we made a mistake. And don't get me wrong, guys, especially for those of you who like really understand the mortgage market and everything. Like, I understand there's risk. I understand it's calculated, but I'm making fun of this whole concept of like, hey, I just made a loan. Now I'm going to go hedge my bets and buy a policy that pays me money when portions or a portion of these loans become delinquent and potentially even go to foreclosure.
So as Kevin just said, mortgage insurance, whether it be LPMI or PMI, doesn't matter, okay? One the borrower knows about, one the borrower's not paying for and knows nothing about. Doesn't matter what kind it is, all it is insurance on a loan or a pool of loans, meaning if that loan defaults, the bank that owns that loan or the investor may or may not be responsible for all or part of the delinquency or all or part of the loss, okay? So they have insurance, just like you have car insurance, house insurance. It's not any more complicated than that, or for the show's purposes right now, we're not going to make it any more complicated than that.
Well, but here's the real funny part. And when I say funny, I mean freaking ridiculous. In a short sale, when a bank wants to do a servicer or an investor wants to do a short sale, when they've got mortgage insurance, they actually have to go to the mortgage insurance company and they have to request permission to do the short sale.
So the mortgage insurance company kind of acts like an investor in that they've got an interest in that loan.
Not only do they have an interest, they have the priority interest in that loan.
Which is why they have to approve it before the actual
investor,
yes. Like a Freddie or Fannie or
which
something
is kind
like
of funny if you ask me. So that's kind of a funny situation all in and of itself. So essentially an investor gives up their rights when they buy that kind of insurance, and they've now handed over to the mighty mortgage insurance company who has the right to do what they want. Now here's the kicker, especially in a state like Arizona, I would imagine similar to California, Nevada, and Florida, not that it doesn't happen in other states, but because we've had the greatest decreases in prices here, I think it happens here more often in these 4 states, is at a certain point that policy is maxed out. And the amount of money that the mortgage insurance company is going to pay to any one investor on any one loan is maxed out.
Yeah, so
once the loss is so great,
it'd be like your casualty insurance or something on your house or whatever.
Yeah.
You have insurance up to a certain amount of money.
Yeah, so what we often see is from a mortgage insurance standpoint, the short sale isn't necessarily a benefit over foreclosure because the payout would be the same.
So what you're saying is, let's say, for example, that a mortgage insurance company had a $100,000 policy, if I can call it that. I may be oversimplifying.
Well, let's use some real numbers because I've got some in my head.
Use the real number.
The loss is $100,000 total to the investor.
Okay.
The payout on the policy is $40,000. No matter foreclosure or short sale, because that loss of $100,000 is greater than the 40.
So the mortgage insurance company has a $40,000, if you will, insurance policy on that loan.
Yeah.
If I can call it that. I don't know
let's
if that's
call it that. It may not be the right term.
May not be the exact right term, but let's call it that. And because of the value of the home currently, whether that home forecloses or short sales, there's going to be a greater than $40,000 loss. In fact, it's like $100,000.
It's about $100,000 loss on the short sale or foreclosure, obviously. But the mortgage insurance, their loss is capped. It's $40,000.
So you've submitted. Let me say this real quick, and then people are gonna have to go buy our video package because they're gonna go, wait, you went too fast. I don't get it all. There's a way you can find out who the mortgage insurance company is. It's called being a good detective. You can go watch other episodes where we've used that word. They're tagged here at the bottom. Okay, we'll tell you how to be a good detective. You can also look on a mortgage statement to see if there's PMI, and you can always talk to the servicer by being a good detective to find out who the insurance company is.
Yes.
So fast forward to a situation. You know who the insurance company is. The lender tells you the insurance company wants a large note or cash contribution before they'll approve the short sale.
So here's a really funny one on a deal I'm actually working on with MGIC.
Okay.
I told you the loss. The loss is about $100,000.
Okay.
Now the mortgage insurance payout is about $40,000 to $41,000. Is what they said to me. They're actually asking our borrower for $40,000.
Oh, okay.
So I said to him, "Hey Dan," because we're on a first name basis. Me and this VP guy at MGIC. I said, "Dan." He said, "Yes, Kevin." I said, "Let me get this straight. You want $40,000 from my borrower?" He said, "Yes." I said, "So that's also the same cost as your payout to the investor on this loan, right?" And he said, "Yes." And I said, "Oh, so you're looking for insurance on the insurance you issued. Basically, now that your policy's coming due, because you are in the mortgage insurance business, actually, you're now not approving short sales and forcing people to either give you money or make their home go to foreclosure because your payout's the same."
Out of curiosity, did Dan offer to give all the premiums that were paid to them on a monthly basis? Did he offer to give those to your borrower?
No. And I asked him, but he said no.
That's a shame. Okay.
I asked him and he said no. So it's funny how crooked or I don't know, maybe crooked's the wrong. Warped.
Back asswards.
Demented.
Can I say that?
Screwed up. Jacked up. Full of pant loads. The mortgage insurance business is that now that they actually have to pay their premiums pay their losses, they're going, well, screw everybody else because we're losing money no matter what. When there's no way to benefit them, they just basically want to take people down with them, and I think that's horrible. And if you're not willing to fight it like we are, you're going to have more homes go to foreclosure because of this issue. So you've got to be willing to play detective and find out who that insurance company is, get contacts there, get the mortgage certificate number, and then you need to be able to fight it, and you need to fight something fierce. And it's a completely different type of fight than when you're fighting at the investor, because there you're talking about actual dollars and cents that they're going to lose.
So give them one key to what really works well actually when trying to fight with a mortgage
documentation.
Documentation
is the number one key.
Hardship documentation, we can say it that way. We're usually known on this show to say hardship doesn't matter, except when dealing with mortgage insurance
company does matter. So that's absolutely the key. So you got to be able to fight that, and you've got to be willing to take that to the top.
So let's recap for you real quick. You may have had other short sales you've worked on before where you didn't know mortgage insurance was there, or it was there and you didn't have any problems. Usually you get a mortgage insurance approval when they can see that their payout's going to be less by accepting the short sale than foreclosure. Okay?
Yeah.
But what we're telling you is when the mortgage insurance company asks for a note or a contribution, they usually ask for that because there really is no difference for them. They're going to pay out the same amount, the 40-40 conversation. They were going to pay out 40 for the short sale or 40 for foreclosure.
Yeah.
So they're going to look to basically just milk everything they can from your borrower so to offset their loss.
They're essentially looking to take the borrower down with them in a ball of flames because they don't actually care about people and they're scumbags.
No, I think that's a great way to say it. I hate mortgage insurance companies more than I do banking institutions.
They're like the snakes. That's what they are.
Yeah.
That's what they are. They're bottom feeders. They're the shrimps of the ocean.
Very well said. So, hey, we know you're unsatisfied with this episode from a standpoint of you didn't get all the information you wanted.
I feel good about it.
But I hope we at least brought to light some stuff and you learned some things. Go check out our Crush It Short Sale video pack for more information.
You know, I think they get the discount if they go to shortsalecrush.com.
Oh, shortsalecrush.com?
I think that's where the discount is.
I have a feeling Webmaster Ninja Drew or his buddy will link it right here below. Dustin.
Shortsalecrush.com. Should we wrap it up?
Let's wrap it up.
I got lint on my legs. 1, 2, 3. Short sale power! Short sale power! Sorry guys, Fred left the episode early.
Lint on my legs.